Okay, we're live. Yes, we are. Welcome back, investors, to Ticker Time News. I'm Adam, and the big question today: the Bulls and the Bears did battle again in another choppy session. So, who won? Investors, I do believe, had a hard time knowing how to interpret today's sped. Oh my gosh. Okay, take a breath. We are live, so there will be mishaps all during the live stream. It always happens. New studio coming together, so today's sound shouldn't be as echoey as yesterday. I'm just slowing down and backing up to the beginning where I should have begun. Okay. I tell you this all the time. Starting these live streams, there's not a day that goes by that I don't start out with nerves, and then once we get 5 minutes into it, everything's all good and they're all shaken out. So I guess that's why I'm backtracking a little bit today to get them out before we really get rolling. But Fed Chair Powell, he spoke today, and I think the market really had a tough time digesting, okay, what's this mean? Because now you're admitting, Mr. Powell, that the Fed's not going to be able to make a soft landing. That changes things a bit, doesn't it? I am starting to really believe that the Fed knows what's going on, but they're trying to keep the public calm because the market is already down over 15, over 20, nearly 30% in some cases for the year. And Fed Chair Powell doesn't want the market to go down significantly more. So he's got to start to slowly reveal what's actually going on, what all of us actually feel. That the market's not doing that great, that the economy's not doing that great. So he started to reveal a little bit of that today. And I don't think investors really understood what to do with that information. And that's why we had another choppy session that kind of ended where it began, or where it ended yesterday. Where it began today was obviously much lower. But being able to pull ourselves out of that big, deep hole from earlier this morning, that was interesting, to say the least. Okay, let's get into today's video, and let's talk about this market today. There were a few sectors that were up. There were a few that were down. Energy took a big hit today. But Fedspeak was a big thing in today's market, and it will be again tomorrow. Chairman Powell, he may come out and say some shocking things tomorrow. Maybe that was the point of saying that today, that he doesn't think that we can do a soft landing. Maybe that was the point, to prepare us for what he's going to say tomorrow. But anyways, the final standing today, it did. Most of the indices were down just a little bit, but barely off from where they ended yesterday. Little change. However, the Bulls and the Bears fighting it out today. I think, and I'm going to go to the 15-minute chart here for you so we can see today, right? 15-minute chart broken up. These two sessions here together was yesterday and today, okay? That's what's on the screen. Yesterday is to the left, today is to the right. So you can see almost identical, a few points difference. We started both days down, climbed our way out of a hole. Obviously, today's hole was more severe than yesterday's, but climbed out of the hole none the least, and then kind of bounced around. Today, there was big support right here at 3760. 3760 on the S&P 500, and we're at 3759.9 right now. There was a lot of buyers stepping in at that exact price point. So that would be $370, what, $375, $360 for the SPY. So I think with the bulls and the bears, oh, a little thunder in the background for a dramatic effect. We have a thunderstorm going by. They have been wild over the past few days. So if I disappear for a moment, aliens didn't abduct me. It was the thunderstorm knocking me offline. But anyways, I think the bulls won today. I think today was a victory for the bulls. Now, let me explain. It was a victory because the market maintained the bulk of yesterday's gains. It was a victory because the Dow Jones, the Nasdaq, the S&P 500, they battled back from opening declines that were greater than 1%. It was a victory because Fed Chair Powell acknowledged in his semi-annual monetary policy testimony to the Senate Banking Committee that it's going to be challenging to achieve a soft landing. And it was a victory because there are clear growth concerns, but that didn't bother the bulls at the least today. It was a victory because the stock market had ample reasons to sell aggressively into yesterday's strength, but it didn't. That resilience, it fostered a sense of existing growth concerns that may, at least for the time being, have been adequately priced into the market for now. At least that's what we would hope, right? Entering today, the indices for the quarter look like this. The Dow Jones is down 12%. The Nasdaq down 22.1%. The S&P 500 down 16.9%. And the Russell 2000 down 18.2%. The scope of those losses has contributed to the thinking that maybe rebalancing activity at the quarter end could lead to a much needed relief rally. That view helped hold today's line, as did the quick recovery effort in price from this morning. Now, that's not to say that today was an entirely convincing move for a market that has been predisposed to selling into strength all year long. Rather, it's just to say that today invited a test of maybe sentiment, and that the bulls, they didn't necessarily fail that test. 6 of the 11 S&P 500 sectors, there's one of those glitches, did end today in the red. A fairly steady performance from the mega cap stocks helped hold the index line, which was also supported by relative strength in a few sectors. Real estate was up 1.6%. Home builders who reported earnings today, it wasn't that bad. Now, they think that prices are still going to be elevated for home purchases. They think that there will be slowing growth, but because they believe home prices are going to continue to rise, that at least their margins will be okay. So that sent a lot of the home builder stocks like KB Homes, right? KBH is the ticker symbol for KB Homes. Let me go back to the daily chart here for them. They were up 2.4% during regular session today and up 3% in the after hours. So a lot of the home builders followed this, and this is what helped the real estate industry sector being up 1.6%. Healthcare was another one. We had thunder in LA today too. Oh, cool. That is very interesting. Man, it has just been crazy. This past several days, we have been getting some fierce thunderstorms. They just are. Actually, I wasn't sure if I was going to be able to do the live stream today because the power got knocked out again today. Luckily, it was only out for about 30 minutes, unlike how it was earlier. But yeah, then man, they have just been rocking things. Okay, back to it. Healthcare today. That was another one. You can see right on the right-hand side of my screen, these are all the sectors right here. Again, if you want these, I can share a link so you can have these on TradingView too, if you don't have them yet. Now, healthcare was up 1.4% today. Another good sector. Utilities were up a full percent. Again, another good sector. And that helped to offset relative weakness in information technology, down 0.4%. And the more cyclically oriented energy. And let's put energy up here because it was a big drag today. Look at this. Energy, daily view. Yesterday, it was up 5.1%. Today, down 4.1%. Now, with energy in particular, I want to look here. I'm going to go to the 5-minute chart, and I will want to look at 3 areas. Okay? So I'm going to squeeze the chart together so we have the past 3 sessions on here. Now, the red line that's coming across for each day, right? That represents kind of the median price or the median range for the day. And there's a lot of buying activity somewhere down here between 555 up to 560. A lot of buying at that area. And then that was the day before yesterday and today. Yesterday, though, there was a lot of selling. A lot of selling at 585. So it's a very narrow gap right there where buyers are stepping in, sellers are stepping in, buyers are stepping in. It's a ping pong. What could tomorrow bring? Back up here in the green box area like yesterday? It very well could. I want to go back to the daily view here. I mean, you can see energy is sold off right now. Relative strength, look at this towards the bottom of the screen down here. It is basically a flat line about 26.5. And that's the lowest it's been. Let me go back here to get all of 2022. That's the lowest it's been all year. We got close. We got to a 35.8. I guess you can call that close. That was back on April the 27th. So we haven't been this weak in energy all year. And it's surprising because when we run our momentum strength leaders, when we run any indicator looking for what stocks have the advantage, have the momentum, have the strength, have the energy, right, to make it up. And this week, I think it's okay to say, I've shared it with our investors on Patreon already, ExxonMobil was at the top. It was the #1 momentum mover for this week. And we can look at ExxonMobil now. XOM is the ticker symbol for ExxonMobil. And energy down today. ExxonMobil down 4% today. It's flat in the after hours. Yesterday, it was up 6.2%. Really holding on to that 50-day moving average. But I do find it interesting at that 50-day moving average, which is right now at 91.23. Sellers were selling at 91.23. Interesting, huh? All right, then we have materials. It was down 1.3% today. Industrial is down 0.5%. So those were the weaker sectors today. Now, energy, it was a drag, I think, mainly throughout the day due to global growth concerns that knocked crude oil down. Let's look at it. US oil down 3.2% on the day. It's up now a little bit, 0.1% in the after hours. So down 3.2% today to $106 a barrel. Did I not write that right? 106? Hold on, let me double check. No, excuse me, 104. My apologies. I wrote 106. 104. $104 a barrel. That's coming down. That's coming down. I almost think artificially. I don't think it's organic. I think there's a reason for it. Oil has broken out of its trading channel that, it's been in for a while. If we go back to the beginning of the year when it really kicked off, look at this. It broke out of this falling wedge pattern, or you could call it a little bit. Look at this. Over the past, going back to October of 2020, that's when oil started to tick higher. And when it got overblown, you can see the mountain in March of this year. This peak right here at $130 a barrel. It quickly came back down and then bounced like a ball. And then it bounced like that all through its ascending trading channel. And now that it's fallen out, we need to look for areas that, if this is artificial, where could the price be going? And the strongest area underneath 104 is 99,100. And it's a psychological level too. But 99,100 on here is going to be right about here on the chart. Let me change that color. Make it purple. So that's the area where we need to watch. Now, there could be a lot of potential if oil does get down to $100, $99 a barrel to step in and maybe take a long position. Because a short position, even for the energy sector right now, that's not a good position to be in because of how far it's gone down. Now, there was no pull from the demand-supported news today that President Biden is considering to suspend or have a national tax holiday on gas and diesel for 3 months. Now, this would be about, I think, 18 cents off per gallon of gas and 24 cents off a gallon of diesel, which would be helpful. Every little bit helps, but there were a lot of pundits that were kind of negative on this move, saying that it's just, a facade, not real action. So that could have helped to keep oil from dropping down to that $100 level. But again, looking for long positions when it gets to that level, I think would be maybe I think it would be a smart move. Shorting it right now, I don't think it is. Likewise, on the commodity side, copper also fell today 2.1% to $3.95 a pound on growth concerns. And copper is something that is going to be needed as we become more technology oriented, even more so than we are today, which also manifested itself in the treasury market. The 2-year yield, it dropped. Look at this, US 02Y. It dropped 17 basis points today. It's at 3.06 right now, and it went to 3.05 at the close. So now we're starting to build this base of support right here, which filled in the gap real nice. Here we go. You see this gap that was created on the way up. Now, gaps get filled, and you can see yesterday filled that gap in nicely. A few days ago, it halfway filled that gap in, but it rallied. So now we're at this area where we're building a support level again, and then it's going to continue its move higher. At least that's the setup that it looks like it wants to take right now. And then the 10-year yield, let's go to that, US10Y. The 10-year dropped 15 basis points to 3.16, and that's where it's at right now, unchanged. And it's also doing the same thing. It's building a area of support right here, where the last time it built that support, it built resistance right here and then broke through. Now it's building support, and as long as it doesn't break through this area here, it could trade sideways or it could, trade up. But it's got to hold this area. And what are we looking at? 3.16, 3.15. As long as it holds that, it'll be up. Now, individual stock news, there's one thing I found interesting outside home builders. That was really interesting today. Coinbase, COIN is the ticker. Whoa, did we just get spammed in the chat or what? Wow. I'll have to remove those after the live stream. Man. Okay. Focus again. Coinbase announced, because the crypto market has been whoa. We'll go look at Bitcoin after this, but with Coinbase, yeah, total. I wonder. There's this dead internet theory, has nothing to do with investing, but I wonder how many bots there actually is on the internet versus how many real people there are contributing to adding content to the market. Not the market, to the internet. I wonder. Okay, so Coinbase announced, and there's a battle right now between exchanges. They want customers, and if they can lock customers in now during a bear market or a crypto winter, then they'll have them for the next bull cycle in the crypto market. And Coinbase is doing that by adding feature after feature, not necessarily expanding on coins, because we know how that all worked out. But if you didn't know, Coinbase had two apps. They had Coinbase, their regular app, and then they had Coinbase Pro, which actually, if you used Coinbase Pro, the fees were smaller most of the time. So I had staked crypto on regular Coinbase, and then crypto trading was done on Coinbase Pro, because obviously getting the better fees. But now they're going to sunset Coinbase Pro and merge it over to their regular Coinbase app. So that way, everyday users of Coinbase can have these, they're calling them, what are they calling them? Advanced trades. Instead of Coinbase Pro, when they migrate the features over to the Coinbase platform or mobile app, They're going to be called advanced trades, I believe. I wonder how the fee structure will be. But I found that interesting. That came out in the after hours, and obviously Coinbase down 10% during regular session. They're down 0.4% in after hours, so not really a budge there. I think consolidating their app is a good move, so hopefully there wouldn't be extra selling because of it. But I found that interesting. All of these exchanges that want your business, from crypto.com and Binance and all of these, BlockFi, they all want as much of a user base as they can get. So I think overall, this is going to be a win for the consumer, for the crypto trader, for the average crypto investor. I think it's going to be this drawdown in crypto, this crypto winter, whatever you want to call it. I think it's going to be a good thing for the consumer. I think the consumer is going to get a lot out of it by the competition from these platforms. So I think it's a good move. Okay. Outside of Crypto Pro, let me run down a few of the main indices here, and I want to look at what we need to see tomorrow. Okay. So why did I skip right by it? All right. So let's go real quick. I did say Bitcoin, so let me look at Bitcoin right quick with you guys, and then we'll look at the indices. I definitely want to do what I'm gonna say I'm gonna do. All right, let's get this fixed again. Now, remember, I had two projections here. Okay, that makes it way too small. Two projections here for where I thought Bitcoin could go, right? Unfortunately, my timeline was way off, right? I had one where I thought maybe the first of this would have been July 24th. The second one was in October. Bitcoin totally dropped much faster because of liquidations, margin calls, stop losses, right? Much faster than I thought it would. And you can see once it started, it chose the bottom trend line as the resistance line. So even when we were trading sideways, going back to it, I thought we would drop once we hit that trend line, because that's what we've been following. But I didn't expect it to drop so far. However, I do think this is where the base for Bitcoin will be built over the crypto winter. And it's a low here of, what is it, 16,000. And then the top line is 20,000. So a 4,000 swing for this red box right here. This is where I believe, and you guys know, this box has been here for a while. I didn't just put it up today. That 4,000 swing from 20,000 to 16,000, that's where I think the next base is going to be built for the next bull run on crypto. And if we just go back here for just a moment, there's a different Bitcoin chart I want to look at, because I've got some other drawings there. Remember, we talked about this a while back, the different bull cycles and the pullbacks and so forth. Let me adjust the chart real quick and go out here. That level right here where the purple line is, let's go a little further, a little further. Okay, so this purple line here is right at where Bitcoin is now, right about 19,000, 20,000. That's where this purple line is. That was the peak in the last Bitcoin bull run. Okay. It ended, or the peak was reached on December the 23rd, 2017, just above my head right here. And then there was an 82% drawdown until Bitcoin reached its bottom. And the high of that last bull cycle was 19,000. I'm just double checking here. 19,666. Rounded up, 20,000. So Bitcoin has never before dipped below its previous bull market high. Well, it did that this time. This was the first time. But it didn't stay down there very long. And you can see that. It occurred right here on June the 17th. It got to the low of 17,930. That's still within my margin there of where I think the next base is going to be built. And this is an 83% drawback where Bitcoin is sitting at right. Well, I take that back. If Bitcoin gets down to 11,000, why did I have it? Oh, that's right. I remember. We were measuring where Bitcoin could go if it reached that. Okay, so let me adjust this chart right here to make it more realistic for where we are right now. And I need to leave it at 420 days. But if we put Bitcoin right here at 20,000, and 420 days, which was the length of the previous two crypto winters, that puts us into December of 2022 before we reach the bottom, before we start to move in an upward direction, right? So again, that fits in with the timelines of, getting close to October to reach the bottom. But if Bitcoin just moves sideways from here to December, that would be pretty amazing. I think there's going to be further dips. We could get a summer rally. It's possible, because just like with all things, there is not, markets don't move straight down, just like they don't move straight up. All right, let's go back to the S&P 500 and let's look for what we need to see tomorrow, right? So I'm going to go to the 15-minute chart, and I'm going to use this for, let me fix the chart right quick. All right. So what we need to see tomorrow is kind of like what we have seen for the past 2 days. We need to see this level here at around 375 on the SPY, 3760 or so on the S&P 500. That level is the low today. And if we look at yesterday's low was 3754, which would be 375-ish on the SPY. That was yesterday's low and today's low, right? Today's low, 3756. Yesterday, 3754. So that's where we need to stay above. Just call it 3760 for the S&P 500. If we can hold that tomorrow, then maybe this could form into a foundation to maybe have a summer rally of some sorts. But that's a very key level. And let me just go to the SPY real quick because I believe those numbers match up a little bit. Today's low on the SPY, 374, and yesterday, 373. So that's the area on the SPY that needs to be held in order to keep this moving in the right direction and getting those short-term moving averages to start to flatten out or starting to move in an upwards direction on the daily chart. We need to hold that. Yes, we fill all gaps. Absolutely. We do. That is a true statement. My gosh, the spam is just incredible today. They have found us. All right, that's that. Let's go to the Nasdaq here. The Nasdaq had this, oh my gosh, this was a massive rally this morning. So the key level for the Nasdaq, I mean, the Nasdaq really, it kind of broke down a little bit today, especially in the closing hour. But the Nasdaq got down to a low of 11,508. Yesterday's low was again at the close, and I'm not counting the very morning rally. I'm counting where support actually stepped in for the day. Yesterday at the closing, 11,580 versus today 11,508. So about 80 points there. So if we can again hold that as support for the Nasdaq, we're starting to build something here. And again, those moving averages, the short-term ones, whether you're using a 5-day, they're going to start to flatten out and maybe start to curve up if we can hold this. Now, volatility is crazy. Let's look at the VIX real quick. VIX. Volatility is absolutely. Did I? Oh, yep. I didn't go to the right chart. I always do that. I'm used to typing in the ticker symbols and there's clicking enter. But when they're not the first one, you have to scroll down there. All right. So the VIX on the daily. Volatility is still crazy. We closed today at 28.95. It is still high, which means any move that is made in the market, it can be a jigsaw, it can be crazy. So we have to be careful of that. We can't go rushing in, planting longs, not right yet. We don't know how this follow through is going to end. And a flat day, down slightly, I guess you could call a follow through. Not much of a follow through, but hey, you know, it's better than nothing. So volatility is still high, so we need to be careful with that. If we look at the small caps, Russell 2000. Let's go into that 5-minute or a 15-minute. Let's go to the 15-minute chart. Okay. So let's see where support came in today. 1687, 1688. And then earlier this morning, 1685. So that 1680s was today's low. Yesterday, it was 1690s. So let's use that as an area. 1680, 1690. That's where we need to find support for tomorrow. If it breaks down, and again, we can't use what happens first thing in the morning. Just look at this morning and what happened. It filled in the gap that was made yesterday, right? That was the big thing that happened today. And the market's being down so low this morning, causing people to have heart palpitations because they are betting that the market is going to go up and that there was going to be a follow-through in the markets today, even though some say a flat day, slightly down, is not good follow-through, but it's better than how we were at the opening, right? So we need to watch that. Okay, let's just look at the Dow Jones for just a moment. The Dow Jones here, it's climbing. It's climbing. You can see this starting out. Where are we at here? Our supporting low here. Above 30,000, 30,449, 30,367. So really, really close. That's the gap, our margin that we need to use, right? Okay, what could mess up the market tomorrow or make tomorrow even better? Going back to the S&P 500 here, daily view. Well, before I get to tomorrow, I have to mention this because I totally forgot. We got the weekly MBA's mortgage application index today, and it jumped 4.2%. And I mentioned it during yesterday's live stream that it could totally do this, that it could totally jump today, because you have those people who are trying to close out these applications before rates get too high. And one thing that I found very interesting in today's index was that there was an 8% increase in purchase applications that featured strong demand for adjustable rate mortgages. Now, in case you haven't heard this before, an adjustable rate mortgage or an ARM loan, it's a loan with an interest rate that can change based on an index that reflects the cost of the lender of borrowing on credit markets. So in a rising rate environment, it can be a risky loan that can balloon out of control. But on the flip side of that, if rates are coming down, then that's great for the homeowner. So I found that interesting. ARM loans are becoming a thing again, because with interest rates going up so high, a lot of times with these flexible or moving mortgage rate, the ARM loan, a lot of times the payment can start out small in the beginning and then it balloons at the end of the life of the loan. So it can be a risky one that homeowners who are borrowing using these need to be careful with. But that was interesting. And again, those who are in desperate need have to buy a home. Those who really, really want to buy a home right now, they're finding more creative ways to go about closing those deals. It's okay, to each their own. Now, what can move markets tomorrow? We get our initial weekly claims tomorrow. We also get the preliminary June IHS market manufacturing and services PMIs. And Fed Chair Powell, more Fedspeak, will be on the House Financial Services Committee starting at 10 a.m. Eastern. Today it was 9:30 Eastern. Tomorrow it's 10 a.m. Eastern for day 2 of his semi-annual monetary policy testimony or update. So that's the big one. More Fed speak tomorrow that can give this market a wobbly, very volatile, time to sit on the sideline action that we all need to be aware of and be mindful of, because it can get pretty crazy. Okay, if you have any questions that you would like to ask, hopefully we can get them through without these spam bots getting in the way. my gosh, I can't imagine all these spam bots. It's just incredible. But if you have any questions, let me know. In the meantime, I'll give you a few minutes to plug them in the comments there. While you're doing that, let me just say, do me a favor, if you could please. Click the like button. That's very helpful to a small channel like this. Also, sharing the video, it's helpful too. And if it's your first time watching and you found some value, then click that subscribe button. It might be interesting. Okay, why didn't semis? Okay. SOX. It's a great way to track semiconductors. So let's open this up a little bit more here. Okay. So semiconductors is a sector of the, or part of the technology sector that's just, it's really, really oversold right now. And I don't know if there's a specific reason beyond all the typical noise, like rates are increasing and that's bad for technology, or the fact that technology just got completely overheated due to the pandemic. And what we're looking for, unfortunately, could be a floor that's much, much lower than where we are. And I know some people call it crazy, but the 2019 theory, that's what we need to watch out for. The pre-pandemic highs, that could be the ultimate low for technology. And that pre-pandemic high is all the way down there. That's a pretty big fall. And I really think that this, honestly, could be acting like a magnet for semiconductor stocks and other technology stocks. And it could be one reason for why technology in particular is so oversold and has and is down so much year to date. And I know it's not a great answer saying 2019 theory, but it's an interesting one. And we can find a lot of companies who are getting close to 2019 levels. This isn't necessarily technology driven, because there was some positive news about AWS today. But if we look at Amazon, Amazon has already tagged its 2019 highs. It's already tagged them. And Amazon fell hard to get there, but Amazon's touched them. Look at Meta. That's another one that's fallen particularly hard. And if we go and look at 2019 levels, 2019 is right here. And there was a lot of fuss there for Meta here, but Meta's drifted down even lower and could potentially be testing the pandemic low. So I think ultimately, and this is a broader view of this, but I think technology ran up so fast because of the pandemic and because of everyone thinking that, oh, technology and the implication, the digitalization, it's all being pulled forward. It's, pull forward demand. But now that the pandemic's over and we're starting to realize that some of these technologies, well, we don't really need them at this moment in time. It's still a little too early. Well, we're going back to 2019 highs on this. So I know it's not an answer people are looking for. Because if you go look at a company like Tesla, and there will always be an exception to the 2019 theory, but let's look at Tesla here for just a moment and where Tesla is at right now. 2019 highs are right down. Oh my gosh, they are so far down. 2019 is all the way down here, right? That's the high right here for 2019. Tesla obviously would be an exception to that rule. At least for now, it is. But other technology companies, let me pull up AMD here for a moment. AMD had some news today. Let's let this load, and then we'll look at 2019. It's pulled back pretty hard. If we go back to 2019 levels, which are, man, 2019 December would be just about pandemic lows all the way down here. Now, I don't think all technology companies would come down to 2019 levels, but then again, we have to be aware of it, and it's a risk. And if we look at what happened with AMD today, there was some news for AMD. I wonder if no, I was looking to see if TradingView had yeah, Morgan Stanley sees further share gain for AMC. Let's see here. What was there was a particular quote that I remember reading in here. But it was something with AMD. They've got, oh, I'm just looking for it. But data centers were going to do, they thought would do really good. It got moved to outperform, $103 price target, overweight. That's what it was, not outperform, overweight. $103 price target, 23% upside. So there was some positive news today, a nice upgrade for AMD, but it really didn't help. It really didn't help. Flat, and it's actually down more in the after hours than it was during regular session today. If I look at the 15-minute break on AMD over the past 2 days, and again, it's green because this is a buy box that I have for AMD, where I think it's an interesting place to buy. If we look at yesterday's low, which was 83.63, today's low was 83.55 and 83.70. So 83.55 and yesterday 83.63. So that's an area where buyers are stepping in. And again, this whole green area I think is attractive for AMD. It's got a ceiling on it of 97 and the bottom is 77. So $20 swing there. So not a good answer for why semis didn't move today. Besides, Fedspeak had people nervous because there's a ton of growth concerns. We know growth is going too slow. And with the Fed chair coming out and saying that, hey, we're not going to be able to do a soft landing, well, you know what? That has people nervous. And then 2019 theory. I just can't get that out of my mind. Let's say China did invade Taiwan. Oh, an interesting question. Where do you see NVIDIA going? 0 or a halt? That's a really interesting question. I don't think that an invasion of Taiwan, it's not going to look like what Russia did to Ukraine. I think it would look different, because I don't think that China would want to damage the manufacturing facilities on Taiwan. So it can't be bombing happening on Taiwan. So that's an interesting question. I mean, goodness gracious. I know China wants Taiwan. China has the Taiwan in their scopes. NVDA is NVIDIA's ticker. Man, I'm not really sure, quite frankly. If China invaded Taiwan, I think all markets. Remember what happened in March when Russia invaded Ukraine and how the markets just kind of hit their low of the year. I think that times 10 might be what happens to the market if China did invade Taiwan, and not just to NVIDIA. I think it would be rough, because that means the US is getting involved more directly instead of indirectly with Ukraine. So I don't think NVIDIA would go to zero, but its market cap would shrink real quick. And then there would be a lot of people buying the super low dip on NVIDIA, and it could stay low for a while, but I don't think it would go to zero. I really don't think it would go to zero. But I do believe it would fall under my buy box here and sink under $100 a share, under $80 a share. NVIDIA could possibly even go to a market cap smaller than AMD if that scenario played out. It's definitely an interesting thought experiment there. Okay. All right, well, that's everything that I wanted to cover in today's stream. Again, if you have questions, I'll give you a moment to plug them in. And this buy box here, 120 is the bottom, and the top, and it hasn't gotten into it quite yet, is sub 150. Sub 150 for NVIDIA. That's when I would like to go in a little deeper. But if we go back to 2020, I don't think the 2020 theory would play out for NVIDIA unless, because that is, right in this area here, which would be about $58 a share. Unless China invaded Taiwan, then we could get it done there. What could cause our next bottom? Our next bottom will be this fall. That's what I think. If we look at the SPX, I think it is possible that we could be building, some sort of a base right here and maybe have a summer rally. That is totally possible. It is also possible that we just ping pong around and basically stay flat for the rest of the summer. That's a big possibility. Seasonality, summertime, it's usually flat. That's why they have the saying, sell in May and go away. I think the next big bottom will come this fall. It could be October when we find that bottom. Because remember, this is a midterm year. And elections always provide FUD for the market to trip over. So October, right before the November midterm elections, and this yellow box down here This is my target for where I think the S&P could be headed this October. And that's somewhere underneath 3,300, which is a pretty far fall from where we are right now at 3,760. But I think that's where we could be come October. I think the summer could be flat to slightly up. And then we'll hit September. Maybe we get a little boost. Or September, that's when we start falling hard. Maybe we get a summer rally and then the steam runs out as soon as September hits and we start falling. And that's where we come down to this target down here in October. But I think the fall, October, that's the best chance for possibly even a bottom of sorts. I know there's a lot of pundits saying, you know, we're forming a bottom now. But I don't think, you know, midterms have been priced into the market yet. That FUD, fear, uncertainty, and doubt of the election, that's going to play a big role in this market getting to a new low later this year. Apple earnings could make a new bottom. That is true. AAPL for Apple. Let's see here. Yeah, Apple has just been going up hard. And if we go back to 2019 theory, you know, that's right about here at this hump. And what is that, about $82 a share? That would be, oh, that's a long ways from where we are right now at $135. Now, I think Apple has got more staying power, and I don't think, like Tesla, I don't think Apple would be affected by this theory. I think Apple could stay elevated at least to this point right here, this bottom line, right around 105, $105 a share. I think that's an interesting one. But if we always fill gaps, there is still a gap opened right here that has never been filled. And that's at $100 a share. So if Apple's earnings, if their earnings growth continues to drop, which it will, could it get to $100 a share this October? Is that possible? I think it could be. But it's going to be a hard fought battle if Apple does get that low, because there's several areas of support. I mean, there was an area right here of support that Apple just, you know, kind of bounced around on, but it couldn't hold it. And now it's filling in a gap that was made over the past couple days. And then the next real big area of support is, you know, down here, $125 a share. That would be the next big area that I think realistically, if Apple has growth concerns and earnings growth does slow down, and I think it will again, I think getting down to $125 is totally possible. And maybe that could be where Apple finally falls. But then again, maybe it gets down to the $100 around October. I think that would be a far stretch. But my goodness, if Apple did, I would definitely be buying shares. All right. Well, I'll go ahead and wrap up today's live stream. Wonderful questions again. Sorry for the spam in the comments. I have to block this person, but they always find a way. But I do apologize for that. Never want to see that in the comments. All right. Just trying to keep this week a little shorter. I know it's not as detailed as I normally am. That's because we're going through a little process of change right now, which is a good thing. So yeah. All right. Well, I will catch you guys tomorrow. You are very welcome. You are very welcome. I always appreciate each and every one of you every single day. I greatly appreciate you guys. All right. Well, I'll see you tomorrow after the market closes for another fun little chat about the market. And of course, investors on Patreon, I'll be talking to you guys throughout the day tomorrow. And I hope you have a wonderful day and you are successful in all of your trades. Okay. Thank you guys so much for watching. I'll see you in the next one. Take care.